Ever feel like the stock market is speaking a language you just can't crack? Worried about throwing your hard-earned cash at the wrong time and watching it disappear? Investing can seem scary due to a lot of technical jargon and unpredictable data. But what if there was a strategy to eliminate all uncertainty and enable you to progressively accumulate wealth, even in the face of market fluctuations? Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. In this video, we will talk about decoding dollar cost averaging and looking into investment strategies. If you're not familiar with this one, go ahead and watch the whole video to level up your investing game. And if you might be wondering why you should care, well, there's a saying that goes, life's a gamble, but investing isn't. Watching this video might just save you from a lifetime of investment misery, or even better, make you filthy rich. So if you want that, without further ado, let's start the video. Investing can feel confusing, like deciphering the Da Vinci Code with your eyes closed. But we've got a secret weapon here, and that's dollar cost averaging, or DCA. It sounds fancy, but it's really easy. Think of dollar cost averaging like this. You're buying popcorn at the movies. You don't wait for the perfect scene to grab a handful. You just keep munching, right? That's the same idea. You invest a fixed amount, like a small handful of popcorn, at regular intervals, no matter what the market is doing. High or low, you keep the popcorn, or in your case, money, flowing. Now, you might think this is fancy stuff, caviar for the finance sharks. But even if your investing journey is as lost as a sock in the dryer, you might already be doing DCA without knowing. Think of it like saving a bit from your paycheck or your Uncle Bob who's already in the investing game throwing some cash into the market. And guess what? This popcorn strategy can even cast a magic spell called compounding that helps your money grow like crazy. But don't worry, we'll keep this secret between us. Feeling shocked? Who wouldn't be? I mean, it's not as easy as it sounds, but it is really easy. But there's more to this dollar cost averaging to be unveiled. Did you know that beneath that easy peasy bit of information, there are some legitimate advantages to DCA? First up, mitigating the risk factor. While investing can sometimes feel like a game of Russian roulette, dollar cost averaging is more like a fluffy blanket and pillow that helps you sleep at night. You see, by consistently investing the same amount, DCA allows you to buy fewer shares when prices are high and more when they're low. Secondly, let's talk about the power of consistent investing. With DCA, your financial success is based on the mantra, slow and steady wins the race. It's like cultivating a prize-winning cactus. You can't expect it to grow overnight. But with a little water, or in your case, regular investments and patience, you will eventually have a glorious specimen that will make your neighbors green with envy. Last but not least, let's talk about taming those volatile market beasts. Picture this. You're a fearless investment warrior, armed with a shiny sword called dollar cost averaging. By using DCA, you can slice through price fluctuations with the grace of a ninja, leveling out the peaks and valleys as you trudge along your investment journey. It's like having the power to turn fiery dragons into cute, harmless kittens. On the flip side, there are also some risks involved in dollar cost averaging, much like navigating a relationship with your unpredictable ex. Now, don't go crying over your ex now. Focus. While it's true that DCA helps mitigate risk, let's not forget that markets can be just as moody and volatile. One day they're up, the next day they're down. Sound familiar? So, no, dollar cost averaging isn't all about rainbows and butterflies. Remember, this strategy isn't about predicting the market's every mood swing. Sometimes, markets take an unexpected nosedive. And guess what? You're still investing, sticking to your DCA schedule like a loyal and committed partner. In this case, a little strategic infidelity like moving into cash or bonds may have been the better choice. And while investing predetermined sums of money regularly, think about the chances that can be lost. With this approach, you can miss out on important possibilities like us purchasing a premium stock at a discount or engaging in speculative investing with the possibility of large returns. That being said, it's essential to keep your financial goals and risk tolerance in mind when designing your investment strategy. Dollar cost averaging can be a knight in shining armor, but it's essential to balance it with other investment approaches. Because one thing's for sure, rarely does one size fits all in the world of investing. Now here's a little secret between you and me. Did you know that Warren Buffett is a fan of DCA? Yup. He's been secretly using this strategy like a ninja, and look where it got him. So if it's good enough for the Oracle of Omaha, it's good enough for us mere mortals, right? To dig deeper into the world of dollar cost averaging, let's ride the roller coaster of a real-world case study. Let's give an example. Meet Jane, your average investor next door. Jane's dream is to build a nest egg for her early retirement on the sun-kissed beaches of Hawaii. She works hard, saves diligently, and pours a fixed amount of her hard-earned cash into a mutual fund once a month. Jane doesn't seem to be affected by the market swings. Despite experiencing both highs and lows, she remains steadfast in her decision to invest the same amount regularly. That, my friends, is the ideal example of dollar cost averaging done right. And guess what? Over time, our protagonist Jane's strategy works wonders. Her average cost per share drops, and she reaps the sweet fruits of capital gains. Her dream of sipping a cocktail, umbrella included, on a sandy beach in Hawaii inches closer with every passing month. All in all, if it worked for Warren and it worked for Jane, chances are it just might work for you too. Just remember, folks, the key to success lies in consistency and commitment. And of course, let me throw in a lifesaver for you. Here are some do's and don'ts to guide you. Slow and steady wins the race. Ditch the cheetah sprints and embrace the turtle's pace. Dollar cost averaging is your life raft, keeping you afloat in choppy markets. Invest in small amounts regularly, like a daily sunscreen application, and let time smooth out the waves. Don't be a market hare. Forget chasing the market like a cheetah. Timing the peak is like training a cat to fetch. Futile. Trust your turtle shell and let time do its magic. Steady contributions, like automatic deposits, are your secret weapons, not risky leaps of faith. Relax, breathe, and invest. Panic is a market monster, but you can tame it with a turtle zen. Imagine your portfolio on a yoga mat, calmly breathing in confidence and exhaling fear. Remember, consistency is your compass, not frantic darting. You've already cracked the DCA code. Easy, right? Who would have thought? Dollar cost averaging is all about dedication, much like dieting. Even at times when the market is acting absurdly, invest consistently in small quantities and watch your portfolio slither its way to Monopoly Town. Thank you for watching. If you like this video, please don't forget to give a thumbs up, comment, and hit that notification bell so you don't miss out on our following videos.